Okay, all right. Thank you very much and welcome to this call. I have decided to record this call for those persons who are not here so that they can also benefit. Okay. Now, why did I do this? I decided to do this to help my community to make sure that everybody is able to do something on their own, even when we are not doing live session, we are not doing any live trade. You can just look at the chart and try to see that the conditions highlighted here are met and you take a trade. Okay, so now let's go to daily. Let's go to daily. Now, this is a trade I actually gave this morning, GPP JPY. But the only thing that happened is that on the one I gave out, I reduced the stop loss. Now, why did I reduce the stop loss? Because the stop loss here is large. The same way the take profit is larger. All right, but not much persons will understand that by the time you see the thing going deep into your account, you say, this trade want to finish my account. But the truth is that in this market there is no straight movement. All right, it will always go up and down, go up and down, but at the end of the day there is a direction that is more dominant that is going. So now on this strategy, what are you looking for? Now, number one, you want to make sure that this oscillator, now I have two oscillator here, but one is the one that you are seeing now. This is called CCI, which is the commodity channel index. All right, and is wrapped in RSI. Okay, so right now what you want to see, you want to see that the commodity channel index touched the 90 level. So as soon as it touches the 90 level, you are sure that this trade wants to start coming down. As soon as it touches the 90 level, you are sure that this market wants to start coming down. Now, it does not just, you don't just say because it touched the 90. No, if it touches the 90, you want to make sure that when you roll it to left to right, from left to right, it remain on the 90. Okay, now I am rolling it from left to right, it still remain on the 90. That is the confirmation. Now let me go to another time frame with this now and show you something. So you can see this one now, when you were here is on the 90. But as soon as you begin to scroll, you can see that it has left the 90 and has come down. Okay, all of this one, it looks as if it was on the 90, but it left the 90 and came down. That is not the confirmation we are looking for. The confirmation we are looking for is we want to see it touch the 90 and remain on the 90. And you are doing that on the higher time frame, the highest of time frame. So now you can see what is happening here now. This guy touched 90 and remained on the 90, even when you move it from end to end. That's what you want to see as confirmation number one. Okay, now this trade, you have seen this as confirmation number one. Now what is the confirmation number two? Confirmation number two is that you want to see that the trade, you want to see that hello, please, no noise on the background, please. You want to see that this market, the candle closes below the moving average. Okay, so now in this case, what do? Now another thing you want to look for, this was where this thing happened. This was where it happened, where it touched. So if you have entered this trade from here, you would have done from this level now, from here now, would have done from here to this level before the pullback, that it went back now, which is normal. Now, but when it went back, what now happened? What happened is now that it gave us what is called divergence. It gave us divergence. Now, I believe we know what divergence is. Divergence is a sign of reversal. Okay? Divergence is when the oscillator is doing higher high, higher low, then the candles are doing higher low, lower high. That they are doing the opposite. Okay? So this is divergence. So you can see now this is a divergence. So now it gave a divergence here. What does that tell you? It tells you that this market wants to start going down. So now I scale to 4 hours. Now, ordinarily, if you had come here earlier, you would have been able to take this trade from as soon as this first red candle closed inside the moving average. This one now that the cursor is now, this first red here now that closed below. As soon as this one closed, you want to begin to look for sales, so you can scale to more lower time frame. But even if you did not do that, you now see a second candle that closed inside with a wick that is touching the moving average coming down. That shows you that there is going to be a sell. So what happened in this case? You see that from here, if you had entered this market from here where I have my stop loss right now, okay, this is where I have my stop loss. As you can see, this is Excel of this market that I'm in now. If you had entered from here, you see that the market sold to this level where I have my new sell now that I entered. So what is happening now is that it's even pulling back from here where I entered now. Okay? Now, what happened? You see that when you take this trade, your stop loss should be above the wick of the second candle that produces wick, which is also outside the moving average. Okay, so that's how to take this trade. Now, even if you go to lower time frame, now let's go to lower time frame. Now, why do you need to work with the higher time frame? Higher time frame is more potent than the lower time frame. So let me remove this thing. But let's go to lower time frame. So let's go to like.
Hello, sir.
Yes.
Sir. Hello, sir.
Go ahead.
What a moving average? What is the setting of the moving average that we are using?
Come again.
What is the setting of the moving average we are using?
No, don't worry. We are coming to settings. I'm going to show you all of that. That's why I said I'm giving you this strategy. So I'm showing you how to use it first before giving you the settings. All right. Okay, so now let's come to 15 minutes, for instance. We are in 15 minutes now. So what do you want to look for? The first thing you want to look for, like I told you, is that you want to look for the CCI come to the 90 level. Now you are looking for it, so you want it to come to the 90 level and remain. So you can see that this one, even with all the movement you move, it still remain. I'm talking of the first one now, even the second one. So with all the movement you move, it still remain. So now what are you waiting for in this case? Now you wait for this candle now to close inside the moving average. So this was the candle that closed inside the moving average. And more than half of the candle is inside the moving average. So what do? You enter your trade. You enter this trade. Let's assume your take profit is far higher and the thing pull back. The thing pull back, you are still in the trade. It did not put you into much negative because your stop loss is way above this your first level. Okay? Now you see that this trade now came down until this side. So now when you now look at it, you see that where this trade stop, if you look at the CCI, it has touched the 10. The CCI has touched the 10. It has touched the 10 and it has remained on the 10 even when you move it from end to end. Do you understand what I'm saying now? Now, not that, okay, take for instance, now this guy touched it, right? But as he touched it, you see that when you are moving it, before you come to end, it has dropped. That's not the type we are looking for. We are looking for the type that will remain, when you move it from end to end, it still remains. That's the type we are looking for. Okay? Now, but I want you to, first of all, before you think of coming to judge on the lower time frame, first go to the higher time frame and ascertain the ultimate direction which is more prominent on the market. So that is the side you will take. So you see that on this daily, it has given us a sell signal. Then we further came to 4 hours. There is so much confirmation. So much confirmation on the 4 hours. Okay? Now, from this level, you can now begin to scale to the lower time frame. You want to make sure that anytime you come to lower time frame, you are looking for sales. Even if it gives you opportunity for a buy, look for sales. Though the buy will happen, but it will not go long. So even if you see, okay, take for instance now, You see this one now, this was a buy, right? We already saw the sell, but this one gave you a buy. Okay, so you can actually take this buy and you get out of it very fast. But for me, because I already ascertained that this trade is more prominent going down, I will not bother myself looking for a buy. I will only concentrate on the sells. Okay, so this is what this is how this strategy is used. So now that I've shown you how we use it, now let me now show you the indicators. Okay, now the first thing you want to take note of is this moving average. Now there is only one indicator on the chart, only one indicator, one moving average. So now let's go to the indicators. Now this is the moving average now on the main chart. Now can you see the period is 10? The period is 10, shift 0, method is linear weight. Apply to close. Style, you can use any color. I'm using blue here. You can decide to use red, green, whatever color you want to use. As long as it's appearing on your chart, you can use any color. Okay? So no levels, then time frame, it should be on all time frames. So that is the parameters, the settings for the moving average. So now let's go to the indicator window. All right, window 1. Now for you to add the commodity channel index, because when you add your moving average, this window 1 will not be there. So you also go to the main chart and you click on this F sign and you look for this commodity channel index. This is it here, commodity channel index. You click on it, it will now open this for you. So when you open this for you now, you click on it like this. Now this is the parameters. Now the period is 100, applied to typical price HLC3. Now there are other typical price HLC. There is HLC4. All right, so we are using HLC3. Now style, you can decide to use any color of your choice, but I'm using black, which is what you are seeing there now. Level is 00. It should appear on all time frame. Then you click on done. Then the last but not the least is the relative strength index. So you click here now to add relative strength index. So you just click on this F sign plus, then you add RSI. So you come to where RSI is, you click on it. When you click on it, it will now appear here. So you now do these settings. Now look at the settings. The period is 15. All right, the period is 15. Apply to median price HL2. Median price HL2. Please note, median price HL2. Then style. Make sure that the style is the color of your screen. Now I'm using white background, so that is why I put it white, because I don't need to see it. So that is why it's showing you white here. But we need the levels. All right. So this is the level. The level is 10 and 90. So you come here, let's assume you don't know how to set level. You click on the level, it will come here for you to edit. So you can type and change this and also change this. If you need more level, you just click on the plus, it will add more level. Then this style is for you to put the color you want the line to show, which you can see on my own chart that is showing black line for the 90 and day. So this is how to set the indicators. All right, I've also shown you how to use it. So this is the 90 level on the RSI now. This line here now is the 90 level. This is the commodity channel index, but the RSI 15 is not showing. What we just need on the RSI is the levels. All right, what we are using on the RSI is the level, which is the level 90 and level 10. Okay, so this is the setup for the strategy. I'm going to end the recording now, so that you begin to ask questions. So I don't want the recording to be too long, so that when it is shared, one can watch it easily and get understood.
All right.
All right.
Well, thank you very much. I really appreciate it.
All right.
I really appreciate it.
All right.
I want to ask, what about buying signal? What is the level of CCI?
Okay, now the CCI level, I said it, maybe you didn't listen. Now for you to buy, you are looking for it at 10. Now look at it here, 10. This level 10 now. Okay? Now, you remember what I told you, that you don't want it to move from that level when you move it from end to end. I'm talking about confirmation now. You don't want it to move. You want it to remain. So if it falls there and you move it and the thing move, which means it's not confirmed yet. Okay? So let's go to a higher time frame now. Let's go to daily. Let's go to daily and look for a signal. So now you can see where this trade started. Now look at this guy. Look at this guy now. Okay? You can see you push it from end to end, it still remains. It did not go anywhere. So this guy is telling you now that from this level, so this was the candle that did that. So this candle now pushed in, all right, and resumed the. So you see that this candle did this for a buy, but you know that the whole day, the next day, it was a sell. But that sell did not even go half of the candle, initial candle. Then before it now gave you this one with a wick. So this alone to tell you that the buy continues. So you can now enter from here. So now you want to enter from here. Let me do something. Let's assume you want to enter from here. Now let me use so you want to enter from here. Now if you go further to lower time frame, so let's go to like 4 hours now. So this was where you entered. You entered from somewhere here. Your stop loss can just be below the wick of that, and you can see the movement. Okay, you can see the movement from this level down to this side. But one thing you must note is that patience is key here. You don't just do this and you want to just say within 2 minutes, no, we are not scalping. This is not for scalping. This is for real trading. Man, this strategy, if you apply it the way I have shown you, with patience, you will come back this Christmas, you will bring hamper for me. All right, so let me end the recording before we begin to ask questions. We're also going to pick trades. We'll pick trades on synthetic because I told you that this is applicable to all markets, all right? We're going to pick trades on synthetic before we leave this course. So let me end the recording so that it's not too long.